Well, welcome to another week. First week in the final quarter of 2024. Wow, time does fly, doesn't it? This week I should have confetti falling or something, I think, because it was jobs report on Friday. I think everybody who is anybody without their head in the sand knows that we had incredible job news that came out on Friday. I think we created like 254,000 new jobs, just really exploded, way above expectation. The unemployment rate came down. So now the question is, did we indeed have that soft landing that you've probably have heard spoken of? So time will still tell, but it's certainly good news. I think it takes a while for everyone to really kind of figure that out for themselves, but very, very good news. So that being said, let's take a look at what happened. I wanted to mention too, the dollar had its best week in 2 years. And I think it was just a few weeks ago, that I was talking about the dollar had its worst week in like 3 years. So, I mean, it's just crazy, the fluctuation. Of course, oil had its best week since March of 2023. Of course, with all of the chaos and unfortunately that's going on in the Middle East, it will certainly affect the oil prices. Unfortunately, that can sometimes trickle down to us as the consumers in our gas bill. So, yeah, there's winners, there's losers, I guess, right? But unfortunate that is leading the cause of the oil price going up is that like I said, the instability in the Middle East. Anyway, so let's get to our charts. Today we're looking at the S&P index, which we typically do on our weekly wrap up. I'm looking at both the daily chart over here and a 1 hour chart. So there's a couple things I want to point out. I always share with you kind of what I'm looking at in my charts, both on the long-term basis as well, then digging down into a shorter time frame. Now on the daily chart, I have a couple of trend lines here. This trend line, can you believe this is the low? 51.69. Remember we had that very, very large dip at the beginning of August. That was August 5th, actually, 2 months ago. It's hard to believe that it has rallied that much up to 5,800 in that short period of time. So it's just been incredible opportunities for us. Now the other price line I have here, I wanted to indicate that to you because, as I've often said, you heard me say many times, support will become resistance. So I'm going to see if this does hold true. This was a very strong level of resistance here. Now we did touch that level this week and we bounced back up above it. So overall for the week, now the S&P, like I said, for the week, I think there was a variance of like 16 points from the whole 5 days of the week. Even though we had tremendous news on Friday, it was kind of recovering from whatever happened at the beginning of the week. So on a week-by-week basis, there wasn't a lot of movement. But when you were watching your charts, and I'm sure you were as I was on a daily basis, the movement seemed so fast. Almost more than I've typically seen on a daily basis anyway, like a 5-minute chart and such. Just a lot of movement up and down and up and down. There's just so much, nobody really knew if the bears were going to be in control or the bulls were going to be in control. So like I said, a very, very tight week of trading. A lot of opportunities, but a very tight range. So that's what I'm watching here on the S&P. I also have a Bollinger Band on. It did dip down, of course, below that band on August 5th. And then it came up, hit the mean, and it went above it. So that is something that I do always watch on my higher time frame charts, is the Bollinger Band, and see if it will typically go back to the mean, and then if it'll go above it, and which it certainly has over these last 3 weeks or so. It has maintained that above the mean of the Bollinger Band. So, again, the reason I have this trend line here is to see if it's going to dip down, if it'll touch that trend line. Had really just 2 strong touches to that trend line, and really you want to see 3 for a validation of the line. So that's what we'll be watching. Okay, this over here, this is the 1 hour chart. And a couple things again I wanted to point out here. Look at the wedge pattern that we have on the 1 hour chart. And this was all leading up to the anticipation of Friday's job report. As you can see that we have that line here and the line here. This large green candle here, that's when the jobs report was sent out. And look at that break above that, above the wedge above that. Look at that breakout trade that was available to you here. It went very fast, so you know, like I said, good risk management and such. But if you were watching it, and you probably were on even on the 15-minute or 5-minute chart, you would certainly have had good opportunities with that. Now, the reason I put these price levels here, this was the range of the day on Friday, and you can see that it certainly had extended up when the report came out, and that was at 7:30 Central Time, 8:30 New York time, and then it came back down, and which it typically is. You have that knee-jerk reaction of all the expectation, and then you will have a drawdown. Oftentimes that drawdown is about at 50% level. In this case, it went all the way, and then it even dipped further, and it touched on that trend line again, and then it broke back up again. Now for the day, I thought this was kind of a funny pattern. Doesn't that look like like Batman? The 2 years here. I thought that was kind of a neat pattern that I'm like, well, that's different. I hadn't seen that before. So anyway, so we'll be watching to see what happens on Monday as far as the 1 hour chart. Now we're going to take a look at, this is the Nasdaq over here. This is a daily chart, and then we have the Dow on the daily chart. Now the Nasdaq looks almost identical, doesn't it, to the S&P as far as the daily chart? But the Nasdaq has certainly not come up to its closer. It's still about 1,000 points lower than its all-time high. And I'm just talking about the future prices here, the futures index prices. But it's, like I said, about 1,000 points right now from its all-time high, which has certainly been different from the Dow and the S&P. But here we have a good wedge pattern that is forming. We have 2 trend line touches, or 3 actually, on the low side, and we have 2 strong ones on the top. So we're going to see if that wedge continues to consolidate a bit before, and then we'll watch for a breakout. Now I'm questioning whether we only have a month until our election day, and so we'll see if it kind of just consolidates between now and the election day, and then of course we know that we're going to have some movement due to that. So, but what's going to happen in the meantime? I'm kind of speculating that we'll see more of a consolidation until right before possibly the election. So we'll see. Over here, this is a daily on the Dow. I wanted to point out this pattern here. Look at these, the last, probably two and a half weeks. Look at that consolidation. Now the Dow during this time frame had about an 860 point range from its high to its low. Like I said, a lot of opportunities when you're drilling down to your 15-minute or your 1 hour chart. But on the overall, I think it never got back up to those all-time highs of over the 43,000 mark. I think it was even like 300 points yet to go before it got back up there. So was that a fluke? Will that continue the trend? That, again, we'll see. But it's just interesting how consolidated that has been of late. And again, the trend line here. So we'll be looking at that. Now this next week we have, I think everybody that's a member of the Fed will be talking at some point over this next week. And sometimes it makes an impact and sometimes it doesn't. It just depends on the interpretation at the time. See what else is happening at that particular time as well. We have Fed minutes coming out on Wednesday, always something to be aware of. And then we have Thursday, we have the CPI and the core CPI, the consumer price index, and then the core consumer price index. Now, the core does not include your energy and your food, which I think that's kind of odd because other than our housing expense, that's probably the most thing that we spend money on is our energy and our food. So that eliminates that. But again, it does give you a separation to see really what the difference is in the cost of living, basically. And then on Friday, we have the producer's price index and the core producer price index coming out. So a lot coming out this next week. We have earnings will be kind of beginning to ramp up. I think there's a couple large earnings. Pepsi is coming out this next week. Delta. There are a couple other ones to be aware of. So just keeping that in mind that it is kind of getting back into earnings season. So Thank you very much. Trade with traction, not distraction. And I want to say that on the back end of this video, you will have a link to our Do This Every Morning video, which was very special. And I want to thank everybody for your comments and support. And we are looking forward to, we are going to be putting out part 2 to that. So a little more clarification, digging into that a little bit more in the next few days. So please stay tuned. Again, thank you so very much. Take good care.